According to Galaxy Digital, 2022 was the second largest year for crypto VC deals. Joining us now with more is Alex Thorn. He's the head of Firmwide research at Galaxy Digital. Alex, good morning. So last year was one of crypto VC's biggest years ever, but your analysis shows that 2022 also saw deal count and capital invested every quarter decline. So how does that square up?
Yeah. Hey, Christine. Great to be back. Look, I mean, I think the real boom in VC happened at the end of 2021 and the beginning of 2022. So it's no surprise that, if you look quarter by quarter, the peak is really, sort of at the very beginning of 22. So both years were big. I mean, our data pegs it a little bit different than George's at around 31 to 33 in 22 and about 30, in 21 and about 30 in 22, 30 billion. But if you look quarter over quarter, Q4 was the smallest in 2 years for both capital invested and deal count. So it's definitely been a cooling off. There's a range of reasons why, but again, just looking at the most recent quarter, it's quite low. I mean, we're looking at like 2020 numbers here.
And also, Alex, that mix changed, right? The mix of what people were putting money in has changed from the beginning of the year to the end.
Yeah, I mean, if you look by stage, there are changes. So, we've seen a continued decline in the number of pre-seed deals, which is an interesting, multi-year trend. You've also seen an increase in Q4 in particular of the share of capital invested in later stage companies, which, makes some sense given just the fact that there are so many more later stage companies than there were years ago. If you look by sector, in terms of, categorical sector, trading, exchange, investing, these types of companies still dominate by capital invested. And frankly, they have. I mean, for years, the only unicorns in crypto were Bitcoin mining manufacturing companies and exchanges. That's no longer the case by unicorns, but by capital, they still dominate. By deals, however, this sort of emergent Web3 bucket that we created, which includes NFTs and DAOs and metaverse and blockchain gaming stuff, that does command the lion's share at this point of deals done, or at least the plurality, I should say. So, I mean, whether that narrative persists going forward, it's hard to tell, but a lot of early stage companies working on those types of problems have emerged. And so, expect more deals in that sector going forward.
Yeah, I can confirm, just coming back from Las Vegas at the Consumer Electronics Show is all about Web3, the metaverse, NFTs, et cetera. And the United States continues to dominate crypto VC with more than 40% of all deals involving a U.S. headquartered startup. And so is the innovation happening in the U.S.?
Yeah, I mean, there's obviously a lot happening globally, and it is harder to track, say, DeFi deals, for example, which may never be reported. So there could be some caveats to that data, but obviously the U.S. remains in a leading position, both in terms of these deals itself, but also innovation. I think that's an important thing for policymakers to really understand, that the threat of doing this poorly when it comes to new regulations or legislation is very high for American innovation.
Is that, though, also a kind of a factor because of just the nature of the market structure, if you will, of the VC funding, and just that just so many VCs are located in the U.S. and so many, that's sort of like how they know to invest. You just sort of invest in your homeland because you know the rules and regulations versus investing elsewhere. Or is it something else about the United States that makes it more appealing for investors?
That's a good question. I think there are things that make the U.S. more appealing, and this is true for all of our capital markets, right? The rule of law, property rights, et cetera. But there are a lot of venture funds in the United States, including many big ones. Many of those raises from big ones like HiveMind and A16Z and Ribbit Capital, Han Ventures. They are U.S. based, but they will tell you that they take pains to find entrepreneurs from all around the world. And it is worth noting too, there were a lot of funds that raised. This was the biggest year, 2022, for the number of venture funds raised, and they raised $33 billion. So there is still a lot of capital out there.
Do you think that will continue now that we have this collapse? Because how much of that funding in 2022 was, from that leftover froth from the Alameda researches of the world, the FTX of the world, the other crypto lenders, et cetera?
Yeah. I mean, there are a fair amount, no doubt. The BlockFis and Celsius, the FTXs, these were big venture-backed companies that really failed and raised a lot of capital. I would say there are macro and monetary policy factors at play here for venture, not just in crypto, but broadly. When the cost of money is significantly higher, you see less investment in risk. And crypto, of course, was seen as, far out on the risk spectrum. So you combine that with the declining crypto asset prices, the blowups, spectacular blowups of certain venture-backed companies, and it does portend a very tough environment going forward for both venture investors and entrepreneurs this year.
Mm-hmm. Well, we do notice that Galaxy Digital is bailing out Argo, which is a prominent Bitcoin miner with a $100 million bailout. I wonder if you could comment, is now a good time to buy up assets?
Well, look, I wouldn't call it a bailout, and I can't comment that specifically on Argo, but I would say that there are a lot of assets that have come to the market that are available through these restructurings, but also when you look at valuation in the crypto space, we're seeing it come down significantly in the private market. So there's, it's a good time if you have dry powder and you find, talented entrepreneurs in the space. And I think there are many,
Alex,
to be clear.
I will worry if Novogratz gets an Argo tattoo. Just gonna say.
I mean, I don't have any tattoos, so. Thanks, Christine.
That was Galaxy Digital head of Firmwide Research, Alex Thorn.